Welcome everyone to Vested Interest. This is Shane back for another stock pick of the day video. It is Thursday. This will be the last one of the week, July 25th. We're going to take a look at Waste Management. We have taken a look at this company before. This is out of the industrial sector. And before we get too far into the video, if you could do me a favor, if you could hit that thumbs up button down below if you find any value in this content. If you're a dividend growth investor, make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Make sure you hit that notification bell so you're notified whenever we put out any new content. Drop a comment down below. Let me know what you think of the video. Let me know what you think of Waste Management. Is it in your portfolio? Is it one you are watching? Is it one you're selling maybe? I do subscriber requests as well. So if you have a company like Waste Management you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down in the comment section and I'll work it into the rotation. And that's another reason to click that notification bell. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I'm interested in adding it to my watch list. Just because I add it to my watch list does not mean that I am buying the company. It means that I do more of a deep dive into the financials, into the balance sheet and the income statement to see, and then do a discounted cash flow analysis to see what I'm willing to pay for the company. And then and only then, if it meets some other criteria, do I buy. Now, we are going to go through the initial screener and see if this one even makes it onto my watch list. At the end, it must meet 5 of 8. If it was a bank or an insurance company, we'd add price to book into the mix and we'd go 6 of 9. Now back to Waste Management. Go ahead and check them out at their homepage, www.wm.com. That is their homepage where I pulled this information from. And apologies for the noise in the background. That is my dog, or maybe a couple of my dogs. We have 3 dogs. But here's Waste Management. And really, what they do is what you think they do, right? They're coming to take your garbage. They help to pile up the garbage in mountain. We have I laugh in Michigan, and sometimes we drive down the freeway and you'll see a mountain of garbage that they are turning into what looks like a little mountain, putting dirt on top of all the garbage they've accumulated over the decades. But we're so used to today's sanitation standards, it can be easy to forget about how far we've come with waste collection. But it wasn't that long ago that the handling of trash was inconsistent and resulted in unsightly piles lining city streets and sidewalks. That started to change in 1893 when a Dutch immigrant named Harm, I'm not even going to try to pronounce that last name there, began collecting trash in Chicago for a small fee. With little more than a modest wagon, he built up a reliable client base over the years by effectively managing the waste of a rapidly changing society. But in the post-war era, something happened that most waste providers weren't ready for, a shift toward disposable products that were designed to make lives simpler. So obviously things have changed since the horse and buggy day, but I doubt he even is still alive. But those who still run the company are doing the same thing. They're coming to get you your garbage. Now, the reason we're taking a look at them, down 8.03% on the day, huge drop on the day, closed out the day at $199.92. We are talking about Waste Management Incorporated, ticker WM, out of the industrial sector. 52-week low as $149.71, as high as $225. They are still closer to their 52-week high than their 52-week low, and they are nowhere near close to 15% of a 52-week low. They also are not in my portfolio. This is not a company I own. It is one that is already on my watch list, though. Market cap of $80.185 billion. They didn't have a beta listed. I believe they have low volatility, but I'd have to go look at that. Apologies, I should have looked at another source and pulled it in here. Price earnings ratio, someone down in the comment section, let me know what the bet is. Actually, I'll post it after I run the video and put it in the comment section also. PE ratio, 31.83, elevated as far as I'm concerned. That's a very high PE. That's something you'd see with a fast-growing tech company. EPS, I like under 18, preferably under 15 if I can get a company under there. Sometimes even lower. Some mining companies you want to get down in the single digits if you can. But anyways, EPS sitting at $6.28 per share. Earnings date, July 24th, 2024. So yesterday was the earnings date. So possibly part of this drop today is because of the earnings date yesterday, or earnings report yesterday. Forward dividend, $3 paid on the year. They are quarterly payers, so divide by 4 or just wait. We'll see it here at the last slide, what they pay per share. Very low dividend yield, 1.38%. Ex-dividend date was June 7th. You would not get the next dividend payout if you were to buy them now, unless you owned them on June 6th before. You'll have to wait a couple months to get their next dividend payout. and June 21st is already passed. That's already paid out. 1 year target estimate $228. They do see it going back up. And what was their 52.25? Setting a new 52-week high at least over the next calendar year. Let's jump over and look at dividend yield theory. To do that, we take a look at their 5-year dividend yield average, 1.65%. We compare it to the current 1.38, or over here 1.38 where it says forward, same number. Since it is lower, that speaks to overvaluation. These numbers are inversely correlated. If it's lower than the 5-year average, that's overvalued. If it was higher than the 5-year average, that would speak to undervaluation. And personally, I like to buy whenever companies are undervalued, and I really like Waste Management. Payout ratio 46.1%, so low payout ratio. I like 75% or under, so they have a lot of room to continue to grow this dividend, make acquisitions, pay down debt, buy back shares, reinvest back into the company. Lots of room to go. 2021 here, we're going to take a look at free cash flow, 2.4 billion. 2022 up to drop down to 1.9 billion. 2023 further drop down to 1.8. Trailing 12 months says 2.1, but again, part of this number is 2024 numbers that have been reported, and part of that is 2023, the last 6 months or so in 2023, since we're already a little over half through 2024. It looks like they may be growing, but we'll have to wait to see how much of the numbers and what exactly it shakes out. But overall, I'll say it actually looks like slightly declining revenue. Maybe they turned it around in 2024. They are repurchasing their own shares, 1.3 billion, 1.5, 1.3, 1.2 in the trailing 12 months. So I like to see that, but the repurchase of shares, even though it went up slightly in 2022, it doesn't offset the decrease in free cash flow. Same thing in 2023, actually free cash flow went down and the repurchase of shares went down. So not going to give them growing free cash flow for this one. Now I'm going to jump over to stockanalysis.com. The previous page was Yahoo Finance. I am not affiliated with either, but I always recommend more than one source so that you can make sure the information you are getting is accurate and up to date. Those are just two sources that I go to for information. You pick any 2 or 3 sources that you like. Just again, don't blindly trust one source on the internet for all your to get all your data from. Now, they do have 17 stock analysts that have taken a look at this. They call it a consensus buy. They have a low estimate of $175, which was negative 12.46% decrease from where it currently sits. If it happened to hit their average of $219.41, that would be a 9.75% increase, and their high estimate of 256 would be a 28.05% increase. All the while, you could collect that low 1.3% dividend yield. Now, we're going to jump into statistics here, look at return on equity and return on invested capital. I like 10% or better for these metrics. Sitting at 35.60% is return on equity. Very, very high. Very, very nice to see. Return on invested capital, same thing, 12.5%, so it's above the 10% I'm looking for. I'd give them a check mark there. EPS growth, I like 5% or better forecasted over the next 5 years. They're sitting at 13.61, so over twice what I'm looking for. And revenue growth, sitting at 7.11, high single digits. That's nice to see. Let's take a look at the dividend history and wrap this one up. Quarterly payout ratio, I think Yahoo Finance said 47, so Stock Analysis has them at 49. Either way, under 50% payout ratio. Dividend growth, high single-digit dividend growth as well. Very nice. Like to see above 5% dividend growth, 7.41% dividend growth over the last 20 years. Buyback yield of 1.61%. Shareholder yield of 3.11%. Now, they do pay out on the March, June, September, December timeframe, and going back to 2021, in December, they paid out 57 cents and a fractions of a penny. March 2022, they raised it up to 65 cents. March 2023, they raised it up to 70. Most recent raise up, March 2024, up to 75 cents. So I would anticipate if they're going to continue that dividend growth in March of 2025, expect another dividend raise. Let's jump back to the screener and see how this all shakes out. So understand the business, that's where we started. Again, check them out at their homepage if you want to know more about them, but they are coming to pick up your garbage, right? That's what they're doing. And then doing the work to make sure it stays in a nice, clean, however they're going to do it, burial site or a facility where they're burning it, however they're getting rid of it. I know a lot of them now in Michigan, they're burying the lines and trying to capture the gases that are created as the garbage breaks down, and then trying to sell off the gas as well. So there's multiple ways that they actually create some income, not just picking up your garbage, but everything that goes along with it. So check out their homepage again if you want to know more about the business. They did not have growing free cash flow. It actually looks like it's decreased for the last couple of years. Maybe 2024 they turn that around. Growing dividend, yes, high single digits. Dividend payout ratio was under 50%, like that. Dividend yield theory says it's potentially overvalued, so no check there. It is not close to a 15, close to within 15% of a 52-week low. So has quite a ways to drop there, so no check there. Return on invested capital and return on equity both over 10%, and earnings share growth is over 5%, so a check there. So 1, 2, 3, 4, 5. It would make it onto my watch list. I actually believe it already is there, and it is one if they had a significant pullback and got to within 15% of a 52-week low, or even set a new 52-week low. It might be one where I would add it to my portfolio. Wouldn't mind something else in the industrial sector. I have Union Pacific and Owens Corning, but I wouldn't mind adding one more. Well, that is it for this particular video. Let me know what you think of Waste Management in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a video you'd like me to do, or a stock you'd like me to cover in a future stock pick of the day video, go ahead and drop it in the comment section down below, and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in, and have a great weekend. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.